What's up, you guys? I'm Sasha, and today I'm going to tell you whether the credit score that you really want to know actually matters. Well, the short answer is no. That's it. End of the video. Have a good day. Nah, not really. Not really. The long answer is the credit score itself doesn't matter at all, but the credit report that it's based on matters a lot. That's the most important thing every time you make a credit application. So let me tell you what the difference is. Let me tell you how you can get to your credit report. Let me tell you where you can find the credit score if you really want to track it, and all the reasons why one is important and the other is not. So let's dive into it. So the actual credit score is a number that one of the 3 credit reference agencies in the UK give you to tell you whether you're good at borrowing money and repaying it or not so good. It's based on a lot of different factors. Some of them will tell you more publicly how they calculate it. Experian have been previously telling bits and bobs. Others not so much. And they're all slightly different. So if you look at the Experian credit score, that one goes up to 999, and something above the 961 is considered excellent. Something from 881 to 960 is good. If you're 560 below, that's pretty bad. It's a number that tells you how likely somebody is to accepting you for a credit card loan, any other credit product, even a mobile phone contract. The 2 other credit reference agencies are Equifax, and theirs goes up to 700. And generally speaking, the top end of the range is quite big. So anything above 467 is excellent, and 420 plus is good. And the other one is TransUnion. TransUnion used to be called Callcredit. They've recently rebranded. You might have known them as Callcredit before. They have a slightly different score, so it's up to 710. 628 and higher is excellent. 604 to 627 is good. 550 and below is bad. So as you can see, these credit scores that all these 3 different credit reference agencies in the UK have are wildly different. They have completely different scales. In some of them you have to be right up to the top in order to be good. In some of them almost half the scale is excellent. The top score is different in each one. The actual credit score itself doesn't mean much when you take it out of context. But not only that, when the lenders go and check your credit report, they actually get not exactly this score, but a very similar score reported as part of the report that they receive. And in almost every case, they completely ignore it. You're wondering,
why are they ignoring the score that I've been trying to get and improve? Is it not important?
Well, here's why. Each lender has a considerably larger amount of information that they can base their decisions on than just that score. And they are basing it on decision for a very specific product, so that particular type of credit card or that specific loan. They know the size of the loan. They can understand you as a customer considerably greater than a generic credit score that applies to everything from a mobile phone contract to borrowing for buying an expensive house. They also have considerably more data to support their decision in understanding exactly what people do with their products. So as a credit card company, you can see exactly each transaction, the times that people make transactions, what do they spend money on, how do they do their repayments, the usage processes that make a lot of inferences from that. As a credit reference agency, all you can see is applications, existing monthly customer reports that tell you what their balances are and a few other high-level details, and not that much else. So you actually have a very limited amount of information to go on to be able to determine which customers are good and which ones are not, and exactly why, the underlying reasons. When credit card companies go and assess you, what really matters is your credit report or credit profile and all the data contained within that. So what they do is they go and look at each individual credit product that you've had and aggregated data on those products, and they go and see, like your repayment history, have you missed any payments recently or not, your utilization, what proportion of your credit limit on credit cards do you use, how frequently do you apply for new loans or credit cards, how many have you repaid and what time scale, like have you had any bad markers like charge-offs, like bankruptcies, like IVAs, any other stuff in the last 3 years, 5 years, depending on the lender. They look for all of that different wealth of information to try to determine what are you going to do when you get their particular product, how are you going to behave. And almost every lender will then have a two-stage approval process. So what they will do is they'll have a credit policy. They'll have a standard set of rules that you have to pass in order to get the credit card. So for example, they'll say, hey, we're not going to accept anybody who has missed a payment on any credit product in the last 3 months or 6 months or whatever it is. Or we're not going to accept anybody who has a like charge-off default on their account in the last 3 years, as an example. Once you pass those rules, you then typically go through a scorecard. And a scorecard is not just a series of yes and no rules. It's a complicated mathematical equation where they plug in loads of different data points from the credit bureau. It can be a dozen variables, it can be higher. And those variables will combine into a score of their own, which kind of sounds similar. It's also sort of like a credit score, if you like, but one that you won't ever see because the lenders calculate it themselves when you apply. And they'll then decide based on that score whether you should be accepted or not. They'll have a cutoff. And in lots of cases, they'll have an intermediate kind of cutoff point where people who fall below that will get, say, a higher APR or a lower loan amount or whatever it is. And based on where you are within their score, will determine how much you can borrow and at what rate and those kind of things. Now, there's a few stages after that, such as passing affordability checks to make sure you can actually afford the repayments on the loan. Then the next step, checking various fraud, anti-money laundering databases and making sure that they satisfy all those things. But moving those things aside, we're really talking about passing the credit score that the companies do themselves. Almost never, when they do these models for building their own credit score, will they use the score that the credit bureau agencies provide, and they will not use that in their rules either. So actually, the score itself is of no use. But there is usually a very high correlation between the score and the credit profile that you have. So if you have a really high score, you are most likely to be able to get a high score with the lender as well, because usually that means you have very good behavior in your products. You probably have no missed payments, you're not too indebted, all of those kind of things. Now, if you really do want to find your credit score, you can do so, and it's free, so you don't have to necessarily spend money. So even though it's not important, you might just be curious, so why don't you go ahead. Just be careful, because with each provider you can get the thing for free, or you can actually go and buy a different service where you'll have to pay a lot of money for it. You really don't want to be paying a lot of money for it. You want to be getting it for free. So here is how you do it with each one. Starting with Experian, the Experian free credit report does what it says on the tin. It tells you what your score is. It gives you some very, very basic information about your profile, and as with all of these services, it can show you products that you qualify for as a way of making revenue from providing you the free credit report. Credit Expert is their premium product that costs £14.99 per month after an initial 30-day free trial. Be really, really careful if you want to sign up for that trial, because it's very easy to forget and begin paying that monthly fee without realizing it. That gives you just that much more information about your credit profile. It gives you a daily score rather than a monthly score, which, if I'm honest, is not really of any use, because most lenders only submit data to Experian on a monthly basis, so it probably won't change on a daily basis anyway. But if you really, really want to see it on a daily basis, you can go there to check it out. Now, one trick with Experian is you can actually go and sign up to the Money Saving Expert Credit Club. If you go and look that up, what they do is they give you most of what the Credit Expert gives, but for free. And you can see all of that data within that credit club for free, without any initial trials or introductory periods. You won't get one or two features, like you won't get the automatic alerts or a few other things if something new appears on your credit profile. But if I'm honest, if you're checking regularly, you don't really need them. So go and sign up for that. It's probably the best way of getting Experian data. If you want to check the other ones, ClearScore is the best place to go to check your Equifax score. Again, they're completely free to sign up for, and there's no introductory period. They'll try to sell you products when you're on there in exchange for providing the free service. If you go directly to Equifax, it's going to cost you £7.95 a month after the first 3 months, so don't do that. You get exactly the same data through ClearScore. If you're wanting the TransUnion data, luckily they're the only ones that don't try to make money on you. You should just go either through TransUnion or direct to Credit Karma. You might have heard, so I already mentioned TransUnion used to be called Callcredit. Credit Karma until recently used to be called Noddle. So both of them changed names. And if you heard of Noddle, Credit Karma is the new name. The service is free, very much similar to ClearScore. They give you the TransUnion credit report and data, and then try to upsell you to other products. There's one service that provides all three of these to you, as well as a credit reference agency called Crediva, which is not particularly useful because nobody really uses them except for very specific cases in sort of subprime lending and very specialist loan providers, but almost nobody in the mainstream uses them. But anyway, they give you all three of the main ones, and it'll cost you $14.99 per month after the initial 30-day period. But given that you can get each one for free on its own, I'll just go and do that, and I wouldn't pay the monthly fee. Now, I hope that's very useful for you. If it is useful, please make sure you subscribe, hit the bell so that you get notification buttons, smash the like button, do it right now, and then go and leave a comment. Tell me what you think, tell me if you have any questions. I'll do my best to answer any questions you might have in the comments, and I will see you again in the next video.